Hey everybody, good morning. It's Pete. Welcome to today's episode of Stocks for Breakfast. It is Tuesday, May 5th, 2020. Welcome to Cinco de Mayo. A lot going on again today. Today we actually have a really good episode planned because we're going to discuss earnings versus guidance and how that should affect the quarter going forward for some of these companies. And I actually have two really good examples of one company that reported good guidance and one company that did not report good guidance, and how we can anticipate the order flow for the next 3 months leading up to their next earnings report, and what we should do to make that trade simple, and whether or not you should hold that trade for the entire time, or whether or not you should look to trade in and out of that, assuming that you have the skills and the trading plan to successfully navigate order flow. So I guess the part that I want to get to there, which is a little known fact, which is kind of cool because it gets, I guess I forget that some stuff you can take for granted. I always use like driving a car. You take for granted some of the stuff is, maybe your nephew or your niece is sitting next to you in the car and you're trying to teach them how to do it. And that's basically what we call trading around a core position. And in day trading or in active swing trading, that essentially comes in where you love the direction of a stock, and whether that's long or short, it really doesn't make a difference. And short meaning you believe it's going down. You have, generally speaking, a bias or a thesis that you've built an argument for. In our terminology, you build an argument for wanting to be a buyer or a seller. And you don't necessarily have that position from, let's say, earnings got reported yesterday until the next time that earnings reports. You essentially have an idea, and during that time period, you kind of trade in and out and around it, where you're booking profits, adding to the position, taking shares off, putting those shares back on, and you're constantly managing risk and leverage in the direction of an idea. Which, by the way, brings me to another point. We had a really good question brought up in our coaching call last night about whether or not it was advisable, or whether, and I hate to use the word, I don't want to say tip or anything like that. What kind of advice? That's the word I don't want to use. I'm going to use it anyway. Was what advice would I give somebody who's just starting out, as far as, would you trade a bigger list of stocks that you look for in scans all the time, and when those scans meet criteria, you trade them, or would you trade the same stocks all the time? And how big, if it was the second one, how big would that list be? And there's really two parts to the answer. The first part is, what I am able to do, or somebody who has a lot of experience, is not the same as somebody who asked the question, which is somebody who's brand new out of the gate. So I'm going to answer that in two different ways. The first one is for somebody who just started trading, or who's trading for less than a year. And I want to make it clear, I consider anybody inexperienced who's not making money yet. It doesn't matter if you're trading 3 months or 3 years. If you're not making money yet, you're still inexperienced because you haven't learned from all that experience that you have. So all that time in front of a computer, all that time reading books, watching videos, placing trades, if you're not profitable yet, you're still inexperienced as a trader to make money. So I want to be clear on that. So a newer trader, in my experience, which again, I own 2 trading firms in New York City. I've been trading a long time, over 20 years now. A newer trader, somebody trying to gain confidence, somebody trying to pull money out of the market on a regular basis, absolutely should be focused on fewer stocks and just 1 or 2 setups. It will be infinitely easier for you to have conviction when you know those stocks, and stocks have personalities. Not all stocks trade the same way. You'll know how much they move on a normal move. You'll know if it comes down and you happen to be a buyer, is this abnormal? Is it abnormal for how the stock normally trades? Should you bail out? Should you kick out some of the shares and put those, and then wait for the trade to get back into it again? So a smaller list. Now the obvious question comes in, how big should that list be? Again, generally speaking, what I like to do, and what I teach in the coaching program, is you will pick a group of stocks that are not necessarily related, but move with the market on a regular basis. And I'll just give you some general ideas. So you take some tech stocks, so maybe Facebook, maybe it's Apple, and then maybe Chevron, maybe ExxonMobil, maybe Lulu, JP Morgan, Goldman Sachs. And today, right now, we're looking at Microsoft, Boeing. some stocks that have a general feel for the market. That you might look inside an ETF, and this is actually the best way to do it. You would look inside of an ETF and say, which stocks are the most heavily weighted in the SOX index, in the S&P 500? And you go through all the different sectors, that sector-related ETFs, and you pull out the ones that match your criteria for volatility. So let's just say, for argument's sake now, you come up with 12, just for argument's sake. Then those 12 still need to meet the criteria of awesome trades. Like we said, we have our A+ trade, and then everything that works away from your A+ trade, you'll have lower conviction. So let's say you have 12, and then maybe coming into the day tomorrow, 4 or 5 actually have really good trade setups. Then those 4 or 5, you're only looking for 1 or 2 actual trade scenarios. So whether it's a bull flag, so you're like the bull flag king or the bear flag queen, or you're looking for inside candlestick breakouts, or you're looking for stocks to be well bid on a 15-minute time frame, and that's the only thing you're looking for. The ability to narrow down what you're looking for and be super specific and get comfortable with those stocks that when the market's moving, they have a very good chance of moving with the market. If they're not, they will have still, because they're market stocks, they have enough liquidity on a daily basis for you to, a daily and weekly basis. I'm not only talking to day traders, that you should be able to pull money out of the market. So dig in over the weekend or whatever you do your research, go into the major ETFs. You can do it anywhere, Yahoo Finance or anything like that. And just look, they have a listing of the major holdings in those ETFs, and then pick a sector, pick a group of them, try and get up to 10, 12, 15 of them, and then go into every day and say, okay, this is where I'm making my money. This is where I'm going to be watching every single day for setups. And then from those setups, I'm going to look for entries and profitable trading opportunities. It's infinitely easier, less stressful, and puts you in a better position to make money, as opposed to having a scan that looks for every stock on Wall Street and just pumps out a new 20-day high, a new 5-minute high, it's very hard to trade stocks that you've never traded before and have conviction in the ideas. Trust me when I tell you this, over time, you'll get to the point where you feel amazing about those opportunities because you know the stock. So I want to get into 2 things. Number one is the over-reliance on what happened yesterday as a harbinger of the overall market. So in other words, the market was down 200 yesterday, the market was up 200 yesterday, and then everybody forming opinions based on what happened yesterday. I can't stress this enough. There was 2 amazing trades I'm going to show you from yesterday because we put the big picture order flow in the context of the short-term reading of the tape. So I'm going to go to the charts right now, and I'm going to basically just walk us through that really quickly. So the 2 stocks I want to talk about on the daily charts, number 1 was Etsy, and boy, do I really hope you took advantage of this yesterday. So here's the weekly look of Etsy, but yesterday's call was the fact, and this is a super simple way of getting relative strength and weakness out of the markets. The market was super weak on Friday, closed near the lows, got absolutely hammered, and we called out yesterday, not only was Etsy strong over the last 4 to 5 weeks, but on Friday, it closed on its highs while the market was very weak. So we said this plus the relative strength led us to wanting to look at Etsy yesterday. And you can see Etsy from a short-term cash flow perspective just had a really super, super good day yesterday. So I actually got a couple of nice comments. Nice job of everybody who took advantage of that yesterday. And the other one was BBY. BBY is actually a little bit of a different situation in that it still has that same 4 to 5 week bullish tone to it, right? So you can see well bid, well bid, well bid, right? But this situation was a little different, which is a buying situation where a stock has closed weak for 2 days in a row, but the criteria preceding that was very bullish order flow. So we actually called out yesterday in the coaching program very clearly that I was looking to buy a lower opening in BBY because of the bullish order flow setup and because of the 2-day pullback closing on the lows 2 days in a row. So I want to hopefully train you to not get overly crazy by reading headlines that basically talk about, oh my gosh, we were up 200. Oh my gosh, 1 day's worth of price action. What's more important, 1 day versus the last 7 weeks? The last 7 weeks are more important. And to really kind of like drill this home, this is actually headlines from CNBC this morning. I took a picture of it just so it didn't go away. Treasury Department looking to borrow a record $3 trillion this quarter. Warren Buffett, extreme consequences. Dow surged more than 200 points overnight, and this is the start of a new Cold War. Don't rely on one. These headlines are purposely written for you to get to click on them. Yes, you want to read them. Yes, you want to get a feel for how you think it might affect the market, but nothing matters more than our ability to read the tape on a day in and day out basis. So just be conscious of what's more important, 5 weeks of buying or 1 day. And then how does that 1 day fit into the consequences and the scenario of us building a trade? So two really terrific trades yesterday, Etsy and BBY, that we had in the video from today's best stock picks. The last thing I want to talk about is how to basically interpret what you believe is going to be the order flow in a particular stock. So Facebook actually had good earnings and good guidance. So I'm expecting Facebook to retest the 224 level over the next few weeks and possibly over the next month. Starbucks actually had the opposite of that, where guidance was not good, and I'm expecting order flow to be moving lower over the next few months. So keeping it earnings simple without your eyes glossing over of thinking about reading earnings statements and income statements and listening to post-earnings calls and all that kind of stuff. And I'm not saying don't do it. What I'm saying is we as traders, as active traders looking for order flow between earnings reports and want to trade that directional bias based on the guidance. When you buy a stock, you're paying for the forward guidance and the forward earnings, not what they're reporting, because they're reporting backwards. So you got to listen to two things: the earnings reported for the last quarter and then the guidance of what they're expecting the next quarter. So if you're buying today or looking to be involved in a stock today, you're paying for the future earnings, which is the next quarter. So Facebook guidance was really good. Starbucks guidance was not, for obvious reasons. Nobody's going out, and they've had to, they're open limited really, which is drive-through right now. So you see a lot of companies that are brick and mortar reporting the same thing. So I wanted to keep it simple as far as how to read the earnings and give yourself a really good structure for what to listen to when earnings are reported. So for example, Etsy's reporting tomorrow, scheduled to report tomorrow on May 6th. So we covered a lot of good actionable stuff today. I want to end the video there. If you have any questions, absolutely leave a comment. Definitely subscribe so you get updates. I really appreciate that. And have an awesome day. Have a profitable day. Take care, everybody.